Um, I want to introduce to you guys. We have a great webinar for you today, and it is about an interesting concept. It's called naked trading, and I'm not talking about trading in the nude, although some of you people may be wearing boxer shorts when you trade from your house. But I'm talking about a concept of basically eliminating a majority of indicators and just stuff that causes confusion. I don't know if you ever heard this term called analysis paralysis before. And this is something that a lot of traders do, especially once they go forward from the beginning stage. They start to add all these different confirming indicators to their chart. And I mean, really all the indicators contradict each other and it basically causes paralysis. You basically don't know when to trade and how to trade when you get into that situation. And like I mentioned, at Trader's Choice, we have a ton of traders trading through us because we're one of the bigger introducing brokers out there. And some of the best ones that I see, one of them is Walt. He's one of the best traders. And I thought for a while that he had this really complicated system. But once I got in touch with Walt, and once I saw what he really does, it shocked me how simple this stuff is. I mean, it's really based on simple support and resistance. You can probably see his chart right now. I mean, I don't see a single indicator on it. So it's just very interesting. It caught my attention. The reasons that I see Walt being successful is he's very picky with his trades. He does not trade off. For excitement. Trading is not a way for him to get excitement. Trading is a way for him to be successful, to basically trade effectively. He doesn't trade for excitement. Does other things for excitement. I know he surfs, so that's a better way to have fun than trade. But the other thing is that he uses proper risk management. He trades very proper relative to his account size. He trades small, and he does not trade often, and he uses very simple setups, but he waits for confirmation. He may sit on his hands for a while, for weeks, if there's nothing there. He only takes what's there. He never forces trade. So these are some of the characteristics that he has. And without further ado, I recommend that you guys listen to him. This is going to be a great presentation. He's going to show you a lot of cool stuff about trading. And afterwards, he did help create a course for us at Trader's Choice. In fact, I'll show you how you can get this course for absolutely free. And without further ado, let me pass it over to Walt. And I hope you guys enjoy the presentation. Thank you.
Okay, great. Thanks everyone for being here. I know that oftentimes you have other things to do, and I'd like to thank Alex and the good people over at Trader's Choice FX as well, and FX Street, obviously, which is one of the greatest places for a Forex trader, FX Street, to get all of your information. There really isn't any other place on the internet that has quite the volume of information and ideas and analysis that you can get at other than FX Street. And in fact, I remember finding FX Street early on in my trading career, and thinking, wow, this is so cool. It was like finally there was a place where I really enjoyed the content, and it wasn't sort of tainted by stock information or other things like that. So anyway, I'm glad that you're all here, and I hope that we get some. I hope that we have some nice, productive discussion, and maybe some ideas that you're unfamiliar with, and something that might strike a chord with you. I also hope that someone makes me laugh tonight, because whoever makes me laugh the hardest is going to get a great prize. We're going to send you a Power Balance wristband for your trading and for your life. I like to wear one on my wrist all the time. I don't really know if it really does anything, but it could. So if you're the one that can make me laugh, if you have the best joke, or you're the one that has the best funny comment tonight, then you're going to be our winner. So keep that in mind, and I hope you don't live in Sweden, because then postage will be a bit much for me from down here in Australia. All right, so here we go. We're looking right. You should see the Aussie dollar right here, and this is a 1-hour chart. I'm going to actually, what I'm going to do is first we're going to talk about some of the we're going to talk about naked trading first in general. And actually, naked trading, first of all, what is naked trading? A lot of people don't know. Yeah. Is it too cold to trade naked in the winter? No. The good thing about that, Boyke, is that naked trading can be done year round. It's something that unfortunately, I do it in the summer and I do it in the winter, and I have found that I have about the same results in those seasons, in spring and autumn as well. It's spring right now down here in the southern hemisphere, and I've been naked trading all winter and into spring now. Naked trading, to me, is basically trading without indicators. So when I first started trading, I probably, like most people, started to think that the more that the more that Ash says that he has become very romantic. The more that I have, when I first started trading, the more indicators I thought, the more I could pile on my chart, the more confirmation I would have. And this idea that if the MACD told me that there was a buy trade, then I should probably look at the RSI and maybe a momentum indicator and maybe the ROC. And if they all pointed in the same direction, that would be double, triple, quadruple confirmation. And that would be something that would really set, that would give me a trade that was something that was really good to look at. Ash says he's become very romantic, and Adrian Monk says that Adrian Monk says, is it like naked trading book by Kramer? I'm not sure about that, Adrian. I'm not sure if I'm not familiar with that naked trading book by Kramer, but it could be. For me, naked trading is just trading without indicators, and I'll show you exactly what I do in a minute. So for me, naked trading is just indicator-free trading. Okay? I would definitely trade naked in the winter. Boyke asked me about that. So why would you trade naked? Well, there's a couple of reasons. One is because you will accelerate your learning curve. And the reason why that happens is when you trade naked, you actually don't need to process any information other than what the price is telling you on the chart. And whenever I look at a chart, did you know that to become an expert at something, you need to have about 10,000 exposures to that? 10,000. So for you to become an expert at juggling, you probably have to try to juggle at least 10,000 times. And if you're going to become an expert at trading, you also probably have to trade at least 10,000 times. And if you want to be an expert at your trading system, you'd want to see at least 10,000 charts to become an expert at your trading system. And that becomes very difficult when you start piling on the indicators. The one thing that I like about naked trading is that I am accelerating my learning curve in trading by trading naked and trading without indicators. I'll show you exactly what I do in my chart here. Here's a chart of the Aussie dollar. Now, what I'll do is I'll move it down to the daily chart. Now, what I like to do with the I'll delete that box there. What I like to do is I like to find horizontal support and resistance zones. And that's what these orange lines, these dotted lines are on the chart right there. Those are horizontal support and resistance zones. And a lot of my trading is based on those horizontal zones. But when I see price go to those zones, I expect it to either pause and then break beyond and keep going in the direction it's been going. In the case of the Aussie dollar that we have here, right? Or the other thing is that when it gets to one of those zones, it will reverse and start traveling the other direction. So those are the two most likely things that's going to happen. And these places also act like a magnet. So what I'll do is on my chart, I'll move to the weekly chart, right? Which is where we're at right here on the weekly chart. And I'll draw in my zones I'll draw in these orange lines. And that will show me places where I've seen price go to that spot and then turn around. For example, if we look at this line right here, this is at 93.47. So we'll call it 93.50, let's say, right? And we'll color that blue so it sticks out. And you can see here, Harley's asking me if my candles are Heishi, and they're not. They're just bars. These could just as easily be candles, right? So there you go, right? Now, on this blue zone here at 93.50, I've drawn a weekly support and resistance zone because my weekly bars have several times, once here, another time here. So this was back in October 2009, and then again in December 2009, and then again in March or April 2009, we've seen price come up and reverse at this 93.50. So there you go. Now, recently, this weekly bar, we see that price went up to this zone, and it didn't actually stop there and reverse, but it did pause. And that's part of the way that I'll trade, is I will count on price traveling to a support and resistance zone and pausing. So if price does break through there, there'll be some hints. So there are some ways that we can decide whether or not it's going to break through or it's going to reverse. So, for example, let's look at, let's go into one sort of trading setup that I like to use. And this is a very simple one, and we call it the big shadow. What it is it's when we see price travel to a zone, and then what we see is an engulfing bar right on the zone. So in this example, you can see here, this is the July 29th daily bar on the Aussie dollar. This is exactly what's happened here, is that price has been traveling upwards. It's broken through this zone, which is at 89 on my chart. This is a white line, so that's a daily support and resistance zone. On my chart, I use the orange dotted lines to indicate weekly support and resistance zones, and the daily support and resistance zones are those white lines. So what's happened here is price has come up and then come down, found support on the 89 zone. Remember, this line was drawn here months and months ago, right? This isn't a new line that was drawn in here. It was drawn at least as far back as here in May. So it wasn't a surprise that price would come back down here. Now the question is it going to keep falling, or is it going to start going higher and then travel to the next zone, which is, in this case, 91.20? The clue is in this bar right here. I know a lot of people like candlesticks. I prefer bar charts. They give the same information. So what we have here on this bar, Harley's asking, do you trade directly from the daily chart or do you use the lower time frame? The answer to that, Harley, is actually both. But we'll stick to the daily charts today, and hopefully in later sessions we can get into some of the lower time frames, because these systems actually work on any time frame. That's a great question, Harley. Any time frame you will see these sorts of setups occur. But for me, because I like to have time, one of the reasons I enjoy trading is that you get a lot of time off. You don't have to trade all the time unless you really, really want to. And in fact, I find that trading the daily charts frees me up from having to sit in front of the computer all the time. And I become more of a manager of my trade rather than a babysitter. I enjoy that. So that, for me, that works quite well. That's one of the reasons I like the daily chart. Another one is that you can get really, really good pips on the daily charts because you're typically going for hundreds of pips. So I'm trading between important support and resistance levels. Right. Yeah, and Addie's asking, you're trading the daily charts and you have a very large stop loss. Yeah, that can happen. It depends on the trading system, but in today's example, if you're using a very, which would be a little disturbing for most traders, Addie asked if it might be a little bit disturbing for most traders who use large stop losses. I find that most traders find it disturbing when they lose money, and that large stop losses are typically not a big worry as long as you're making money. And in this case, if we're looking at this trade, what we're seeing is that prices come down to the 89 zone and printed a big shadow here. Now, if we were going to take this trade, the key trigger on this trade is to watch the market action. So I'm zoomed in here, which is to watch the market trade higher than the big shadow bar. Okay. So, oh, sorry, I've missed the boat. It's way back here. So this is the big shadow on the 29th of July. Now, the reason it's a big shadow is because the low is lower than this low. The low on the first bar was 89.06, and the second bar was actually 89.05. So it's a hair lower, and the high is higher as well. It has a nice big upflow. So what we do is we put a buy trigger right here at about 90.45, and if in the next day right here we see price go beyond 90.45, then we take a buy trade, and we'll ride it up to the next zone, which in this case is 91.20. Now, what you can do, Harley's asking, do you trade directly from the daily chart? Yeah, so outside candle. A big shadow is an outside candle. But it has to have, in this case, because it's a bullish candle, Adrian, it has to close really up high. The higher the better for this situation. So that's what I'm really looking for. Now, what I like to do, once it breaks the high, then we go into the trade. Our stop loss goes beyond the low of that bar down here around 89, and then we'll trade it up to the next zone, which in this case is 91.20. But then after that, we've got another zone at 92.10 up here. So what I typically like to do is once we hit our first profit target, I'll move my risk to break even or plus 5 or 10 pips and then shoot for the next profit target. So in this case, your first profit target's up here, which is only 70 or 80 pips away, but your second one's all the way up here, which is 180 pips away. So I've got a question here. Could you please briefly elaborate on how you set the support and resistance line? Absolutely. And so I'll give you a hint. One of the nice ways to set your support and resistance line is to simply go down to the if I'm trading the daily chart, I'll go to the higher time frame. So I'll go to the weekly chart. I'll go to that weekly chart and I'll find places where price has bounced off and found support and resistance. Now, a really, really simple way to do this if you're starting out is to move to a line chart, and then they'll pop out. And so you see in this instance, we've got a zone here at 74.25 and a zone up here at 77.70. And why is that? That's because we've seen several touches here at 74 and several touches up here at 77.70. So that's how I'll do it. And you'd like to see touches on both sides. So on both sides of the zone. So in this case, the 77.70 zone has a resistance touch here, and it has some support touches here. Those are the ideal zones. And I typically will only draw a zone if I see touches on both sides. Now, of course, if you have an extreme high and then an extreme low where price touches an area and then rebounds and never comes back, well, those of course can be considered zones as well. And then I have a question here from Goncalo. Says, do you mean to conserve the line after it has been violated? I'm not sure what you mean by that. I will keep the line there no matter if price has gone beyond that zone, if that's what you're asking. So in this instance, we've seen price break beyond 77.70. That doesn't mean that it's less valid as a zone. Boyke's asking me, do you only trade trends? No, not at all. I trade, in fact, most of my trades are counter trend trades, but you can trade these methods either way. So in our instance here, let's look at a counter trend trade. Yeah. So when something is a resistance, so Goncalo is asking us, when you have something that's changed from resistance to support, it's okay. It doesn't matter. So, for example, let's find a trade here. Here's a great one right here. Right here on this is 2004, February 15th. And what we have here is a big shadow. It has gone to our zone here at 77.70, and it's printed a nice bearish big shadow right there. And there it is. Now, what I like about this trade is that it's gone up to the zone that we like, and it's printed a big shadow. And it's also an extreme. I like to find my trades that are at extremes where if you look to the left of the chart, there isn't any price action there. And that's why this one is so nice. It's fulfilled the three criteria, which is 1, the trade is up and has penetrated our zone. 2, it's given us a reversal signal, in this case a big shadow or an outside bar, where price has gone higher than the previous bar and traded lower than the previous bar and completely engulfed it. And then what we do is we just put our order right here and wait for price to penetrate that order, and then we expect price to go to the next zone, the very next zone. And in fact, that's exactly what happened here. What risk-to-reward ratio do you use? I have an example, a question here from someone saying, what risk-to-reward ratio do you use? That's a great question. Actually, what I generally do is I have trades, my winning trades are much larger than my losing trades, and that's because of my money management system that I use. The risk-to-reward ratio is not as important to me as a lot of people make it out to be. And the reason why, and I've written an article about that I'd be happy to send you, is that most people don't, most people look at trading from 1 or 2 different levels, and they don't consider everything. So when you're talking about your trading system, and you're talking about your risk-to-reward ratio, there are other things that go into that, into how successful and how much money you're going to be, how successful you'll be as a trader. Depends a lot on other things like your average win, your average loss, the percentage of wins, the percentage of losers. All of those things go into it. So the risk-to-reward ratio isn't a big deal to me because my money management ensures that my winning trades are going to always make more money than my losing trades. But overall, I probably don't pay a lot of attention to that, as much attention to that as a lot of other people do. John says, hi Walter, isn't a break and retest system better rather than getting filled at the bottom of the break? Well, that's an interesting question, John, about a break and retest system. I generally consider when I get a signal in one of my trades, such as this one that we're looking at, it would be essentially a retest. And the retest is that we've seen price go to 77.70 in the past, and it's just simply happened once more. And the confirmation for me that it's hit the support and resistance zone and retested it and found resistance once again is, in this case, the outside bar with a big shadow, this giant bar right here. So I don't mind getting filled at the bottom of the break. In other words, I don't mind putting my order down here at the bottom. And the reason why is if I'm correct, then I'm more likely to get filled. And if I'm incorrect, I'm less likely to get filled. In other words, if the market this market was in a strong uptrend on this chart, and if I'm incorrect, then the market might just keep going higher. But if I'm correct, then it will go lower and will break the low. So I wait for the market to confirm that what I've thought is going to happen is actually going to happen. Now, it may seem unnatural, and to a lot of traders, it's a little bit weird that you wouldn't trade it differently, but it actually is a much more conservative entry if you wait for the market to go in the expected direction. Adrian says, do you enter at the opening of the next candle or after the high and low of the previous candle? I enter after the high or low has been breached. Yeah. So that's basically. So in this case, this entry would not occur until the low of this big shadow bar is breached, which would be over on this day. We had to wait a day, and then the very next day it did go. Yeah, and so John says, yeah, that makes sense. It's just a way to minimize risk. That's right. Taking your entries in this method is one of many methods I use, but it's one that you can do to minimize risk, because if the market doesn't go in your expected direction, then you may not get triggered. In fact, you're actually telling the market, okay, I think you're going to go lower, but you've got to go much lower now for me to actually get in this trade and risk the money. And that's what I like to do. And that's, in the past, for me, that's been successful. Would be nice if people. Okay, all right. So that's what we're looking at here, is this big shadow bar. And so it's gone down to this first zone, which is at 74.27. And then at this point, I would expect that price may make it down to the next zone, which is down here at 70.33. So what I would do when price made it to my first profit target is I would move my stop loss to break even. And you'd see what would happen here is if I just left it at that, I would have indeed been stopped out at break even up here at the entry. Boyke is asking me if I use more market or limit orders. I generally like to use buy stops and sell stops. So I'm using those. They're not buy limits or sell limits. They're usually buy stops or sell stops. And again, the reason why is because I'm saying I think the market's going to go this way, and for me to enter the trade, it's actually got to trigger. It's actually got to go that way and start moving in that direction. I think it's more conservative that way, because you're allowing the market to tell you that you're right before you actually get in the trade. And for me, that's really important. Okay, so, and this obviously, so the idea is that the market's come up, hit this zone, printed a nice bearish bar, and told us it's probably going to go lower, and that's exactly what happened. Now, let's see if we can find another one. These are weekly charts. I trade weekly charts. I also trade daily trades as well. Let's see. Let's just go. You know what we should do is just take this like a backtesting sort of experiment. So and many of you may or may not know, you can use these MetaTrader demo accounts to backtest. And one way you can do that is just hit the F12 key, and you can move one bar at a time. So Adrian's asking, so to summarize the strategy, an outside candle at a weekly or daily support and resistance zone. Right. I mean, I have an ebook on this. I'll happily send you guys the ebook if you want. It summarizes everything, but the idea is basically this, which is that you are going to go wait for price to approach your support and resistance zone. Once it gets to that level, once it gets to that zone, you wait for an outside bar to confirm, right? So in this case, what we have here is we have the market's gone up to the 74.27 zone, and it's printed a huge, giant bullish bar. But that's not a reversal signal, so we won't talk about that one right now. Let's see if we can find a nice reversal signal. So we'll wait for price to get to a zone, and then print a, that's not one. It was almost one, but it wasn't. Let's wait for price to get to a zone and see what we've got. Jack says if the weekly line is close to the daily line, then which support and resistance do you use in an entry line? Well, as you can see on this chart, my zones are usually quite far apart. This is a bit unusual because we're down in the 70s, and the Aussie hasn't been down there for a few years. But you can see on this chart that I like to trade, if I'm trading a daily chart, like I normally do, I like to see the weekly support and resistance zone. I like to see those as an obstacle. To me, that's better and safer than a daily zone. I will use a daily support and resistance zone, but the weekly ones are more important to me. Adrian says, so if we can see inside candle at a support and resistance zone, we can use the same technique. Adrian, you might do that if you're backtesting. If I were a trader and I backtested that system, that could be something that you would look at doing. Personally, I don't do that. I like to trade big bars because for me, they've been more consistent and more successful. So, for example, what we have here is a situation where we've got a nice, big, bearish, big shadow, and it's right on our 74.27 zone. So what I would do in this instance is I'd put my order down here below the low, and the low here in this case is at 73.68. So I'd put an order at say 73.60, right? And I would put that order there to sell. Jack's asking if you use a monthly line. Was that more reliable? Jack, you can absolutely use a monthly line. I see no problem in using a monthly line. No problem at all. You can use monthly and weekly lines, and then trade off of those on your daily chart. That would be great. I would definitely do that. So I'd put my order right here, and I'd want to sell it. Now, where would I take profit? Well, on this chart, I'd probably call this a daily zone down here at 73.37, and then after that, I'd probably call this 72.60 area. 72.60 area would be another zone. So let's see what happens here. I don't know what's going to happen on this trade. Let's take this trade and see what happens. Okay, it's broken. So now we've advanced one bar, and you can see here that we're in the trade. Our stop loss would be above the high up here. Okay, now it's gone back up. See, at this point, I would probably jump out of this trade. I would probably say, no, I don't want to take this trade. It's probably going to break out up to the upside. Yeah, and it would have stopped you out. So I would have taken my loss before it hit my stop loss in that case. Boyke asks, do you ever use diagonal support and resistance lines? I have used them. It's not something Boyke, that I use a lot. I much prefer to use these daily support and resistance zones. These daily, and I look at an important point to mention is that I look at daily support and resistance lines as zones, as something that price sort of it's both a magnet. It's a magnet that attracts price, and it also resists price. So for me, it works both ways. It's a place for me to enter a trade on that zone if we have confirmation with a big shadow, and it's also a place for me to take profit. And if it gets really near the zone, like this bar did up here, I consider that a touch. And for my weekly zone, the touch can be 20 or 30 pips away. And for a daily zone, it might be 10 or 20 pips away. As the time frame increases and goes up, the touches can, I'm more liberal with what I consider a touch. Mike says, what's F12 on a Mac to backtest on MetaTrader for? I don't know, Mike. That's a great question. Maybe someone can help him out, but I'm not sure how you would use it. I don't know what the equivalent to the F12 key is on a Mac. Okay, so here we are. We're still waiting for. We'd like to see price go up to one of our zones and put a nice bearish bar, nice bearish outside bar. Let's see if we can get something like that. Not yet, folks. Let's see. Almost had one, but that wasn't big enough. It's really good for me if the bar is the biggest bar we've seen in quite some time. So not only do I like to see a big engulfing bar, but I like to see a bar that has a greater range than the bars in the recent past. For me, that works really, really well. Okay. Let's see. It'd be great if we could get it up at 77.70 and get a nice bearish bar. No. Or a bullish one down here at 74.20. No. Okay, this one's good enough. So this bar isn't the big. It is actually it probably does have the biggest range we've seen in quite some time. It's a nice bullish bar. So I would put the high of this bar is at 74.96. So I put my buy stop at 75.02 or something like that, and wait for price to break higher. And I'd probably take profit up here in this zone first, because this is a nice daily support and resistance zone, isn't it? We have all these daily lows here, all these daily lows, and these daily highs here, and these daily highs here. So I would definitely put my profit target up here at, we'll call it 75.60. And then we'll see what happens. Let's just see what happens here. My stop loss will go down here at 74.27. Oh, another loser. Bam. Sold. Yep. We just missed one too. Here was the winner right here. This big bullish. Wow, that was a great one. How many trades do you take per month? Ash is asking. That's a great question, Ash. I don't trade. I don't take a lot of trades. Let's see if we can. Let's see. This is a statement from Jez says, from what it looks like, this one will have to wait days or weeks to get a really good signal. What should you do, especially if this one is new to the market? Well, here's the thing. Here's the thing, Jez. This is an account from when, I'm not sure. I think it was the first trade was in July. Okay, so this account was opened in July. So opened this account in July, and in that time, from July till this week, or last week, there haven't been very many trades. I might only take a few trades a week, maybe one or two a week, because I follow about 23 currency pairs, and usually you'll usually get one or two a week if you're trading the daily chart. And you can see on the account, which it made good money. So it started at $380,000 and it made about $50,000 in 2.5 months or whatever. So if you do wait it out, you can make money. It's really good to be patient for me. I didn't make a lot of money when I first started trading, and the reason why is because I was someone that over traded. I was someone that thought, well, if you're trading and you're making money, then if you trade more, you make more money, right? Well, what I found is that as I took fewer trades, I actually started making more money. And so for me, everything's got to line up perfectly for the trade. Harley says, will your trading be affected by the new NFA ruling on October 18th? No, Harley. My trading will be the same as it's always been. I'll still be trading the same way. So that's, yeah. And then Miguel says, it makes me think about me. Yeah, I agree, Miguel. Over trading is something that happens to a lot of people. It's not something that's unique to me or you. It's something that a lot of people have to fight against. Something that you got to look out for. And for me, it's really important. It's really important for me to wait for those really good trade setups. Jez says that many expert traders say for newbies, one should start out trading with only one pair. What would you advise? Well, I think you bring up a good point, Jez. I actually believe that you have a choice as a trader. I think that one thing you can do is trade one currency pair and get really good at that currency pair. But another thing you can do is you can actually trade one trading system and trade on a whole bunch of currency pairs. So, for example, this trading system that we're talking about today, this trading system, this is something that it works on a lot of different markets for me. I've seen it work in a lot of different markets. So it's not just the Aussie dollar. It works on, for me, it works on I've seen it successful in the pound, yen, pound. There are lots and lots of different markets that you can see this trading system work on. So right now we're looking at the yen. So for example, on the yen here, I'm looking at weekly support and resistance zones on the yen. And if I just wait for a setup like this, here we go, right there. If I just wait for a setup right here, I'm waiting for a big shadow on my weekly support and resistance zone. Right here. There it is, right there. This is a daily dollar-yen bar. This is all the way back in March 4th of this year. And you can see price came down to our 88.00 support and resistance zone, our weekly zone, and then it broke the very next day. And, you know, it made it all the way up to here, which would probably be considered a daily zone because of these bar highs here, bar lows there, bar highs there, bar lows there. William's asking if you could use the same system but trade on lower time frames, like a 4-hour or 1 hour. Absolutely, William. I would suggest using a higher time frame first. Like what I like to do is if I were trading a 4-hour chart, for example, and I do sometimes, I would use daily and weekly support and resistance zones to trade my 4-hour bars. And if I were trading a 1-hour chart, I would use daily and 4-hour support and resistance zones to trade my 1-hour chart. That would be critical because I would want to make sure that I'm going in on the trade at an area where, you know, we had really good support or resistance. You know, I don't want to go into a trade unless I think that it's a really good spot for me to find support or resistance. Yep. Yeah, let's look at another pair. Let's see if we can find another pair here. The CAD actually had a few lately. Here's one. Here, actually, we've had a few on the CAD lately. In fact, these are actual trades that I've been taking. So here's one on the CAD. You can see where this green arrow is. It's right here on our daily zone at 102.46, and you can see what happened is price broke the very next day. It only took 3 days for it to get up to the 105.67 level up here. And that was right here. It was a nice bullish bar. And then we had another bearish one here where this white arrow indicates. Let me get rid of this blue box because that's kind of annoying. Yeah. But what happened here with this nice big bearish big shadow here is that we've seen price break out and fall all the way down to the next one. It took a little bit longer on this trade, but it was sort of the same result. So in this instance, on the green arrow, we're seeing a reversal trade where price has been traveling down and then came up. And in this instance, we see where price was traveling down. It's sort of a continuation on this zone right here. But the really clean ones have a lot of room. You want to see a bar that's got a lot of room and it's out there sort of all out on its own. Like this one down here. That's a beautiful one. This October, what is this? October 15th, 2009. That's a great one. Right there. It's all by itself down there on that zone. Perfectly placed. That's great. Does anyone else have any questions? I think the winner tonight was Ash. I think Ash had the funniest comment. So I might have to send Ash the prize. I think Ash gets the prize. Yeah, Miguel says the last one was sort of trend following. That's right, Miguel. That was sort of a trend following. Ash, if you can email me. Here's my email, Ash. I'll need to send you the power balance band that I promised because you had the best jokes tonight. So just here's my email here. It's highpipdiet@gmail.com. Just send me your address and also if you want to go to Trader Choice FX and get an account, they can set you up really good. You can get rebates with Trader Choice FX, and you can get a lot of education there. There's a free course there that I usually charge hundreds of dollars for. That's also there at Trader Choice FX. So There's a lot of great information at Trader's Choice FX, and they're actually really knowledgeable guys. Okay, so thank you very much, everyone. I do love to eat pit koiki, and actually, if you send me your address, I'll get that sent out to you. Thanks a lot, everyone. Thank you.
Hey guys, this is Alex again. I want to thank you very much. I hope you enjoyed the presentation by Walt. I didn't want to let you know real quick that there is a free course available on Trader's Choice FX, and Walt was pretty much the designer of the course, and it's really about these support and resistance setups. So you guys can get it for free. I'm going to just show you the page where it is real quick right now. I hope this is working. Yeah, that's it for you guys. That's the page, and basically you can go there, and then you can basically sign up. Just put in your name and an email address, and you can get the course for free, and no obligation of any kind whatsoever. And I think you guys will enjoy it. If you can be patient with these trading setups, I mean, I think you guys will you'll find them really valuable. The biggest thing here is just really waiting for one to happen. And I want to thank Walt. Like I said, he's one of the best traders that I've seen. I want to thank him for his presentation. I want to thank you guys for attending, and look forward to seeing you for some more great presentations.